Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So I'm happy to be back. I know I'd taken a 2 weeks break, but I know for a fact that you guys were well taken care of. I'm hoping that you guys got to learn a lot from Samson Zera. I know he's very experienced. Hopefully you had a different and wonderful experience with him. So if you learned anything new, kindly share in the live comment section. This will be very helpful going forward. So I know a 2 weeks break in the market is a short period, but then a lot of things happen in the markets, and I'm amazed at how much you can miss. So before I make further progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. Hello, Charles Mukua, and thank you. Good morning. So, as we all know, the key highlight for today is the events that transpired last week with the First Republic Bank of the US, which was down 97% year to date, before collapsing another 45% on Friday last week. The market was closed on Monday, that is yesterday, but all the more, a lot of things happened. So one, after the collapse of the First Republic Bank, the bank was put under FDIC receivership, and then it was auctioned to JP Morgan Chase for about $11.6 billion. So that's the key highlight, basically indicating that there is another crack in the US banking crisis, and we may not have reached the end of the banking crisis. We will be expecting more developments to be happening this week. So hello, Davis, J Squad, Kevin, Vandy, Charles, and Vandy. Thank you guys for joining the session. So besides the collapse of the First Republic Bank, we had a big surprise this morning as the Reserve Bank of Australia met today, and they decided to hike interest rates by 25 basis points, eventually pushing their interest rate to 3.85%, which led to a very strong rally in Audi USD, as well as other Australian pairs. So if you're looking at your charts and you're wondering why the Australian dollar is rallying, it's mainly because the Reserve Bank of Australia went for another 25 basis point hike. And in the release, they basically mentioned that if the situation necessitates another one, then they are ready to go for another rate hike in order to control inflation and push it back to towards their 2 to 3% target. So, 1 to 3% target. And in this case, investors are very positive that the Australian dollar will continue to recover against the US dollar. So we know it's a big week, and there's a lot of things happening, and also there's a lot of things that we're expecting. So a quick perusal on the economic calendar will show you just how magnificent the week is. We're expecting a lot of volatility. So Monday, there was a lot of bank holidays. Remember, it was Labor Day. It was a public holiday. So this morning, the cash rate went to 3.85%. And for the rest of the day, we are not expecting much of a news. So yes, we'll be looking at manufacturing PMIs, but the most important news for the day will be 3 main releases. The first one will be from the Eurozone at exactly midday, and this is the CPI flash estimate. So in the previous reading, it was at 6.9%. We expect European inflation to spike to the higher side to 7.0%. So investors will be reacting to this information, basing their decision on the expected decision by the ECB, which is expected to meet later this week. So the European Central Bank has been hiking interest rates in order to control the high inflation. So if inflation spikes to the higher side, then the ECB may be compelled to go for another 50 basis point hike, and that would be expected to strengthen the European dollar. So, sorry, not the European dollar, but the euro. So then we also be looking at the core CPI flash estimate at the same time. So this is basically the consumer price index without the volatile prices of food and energy, which is expected to slow down to 5.6%. So then we'll be looking at a speech at 2:20 p.m. from the Reserve Bank of Australia Governor Stephen Loy. This will be happening at 2:20 p.m. So if the RBA governor adds more commentary, then there could be more gas fueling the Australian dollar rally. So this commentary or this speech may necessitate or lead to a continued rally in the Australian dollar. But then if the governor is reserved, then we could be seeing the market reversing. So this will be very important for the Australian dollar traders today. Then later on in the day, we'll be getting the JOLTS job openings data as a leading indicator of what might transpire with the non-farm payrolls later this week. So it's a crazy week where we have central banks raising their interest rate data. At the same time, we also be looking at the non-farm payrolls on Friday. So among the key highlights for the week, for the day, we have seen it's just 3 data points, CPI flash estimate, a speech, and also the job openings. So tomorrow, we'll be looking at the employment change in New Zealand, a speech from RBNZ Governor Adrian Orr. Then we look at the ADP non-farm employment change before we look at the FOMC statement, Federal Funds Rate, and the FOMC press conference. So tomorrow, the most important data point will be the FOMC press conference, where the US is expected to hike interest rates by 25 basis points, and then later on convene the press conference, where we could be seeing Jerome Powell shake the markets yet again. Then, early in the morning on Thursday, Caixin manufacturing PMI from China. This often leads to high volatility in the markets. So this will be very important to watch. Then we look at the main refinancing rate of the Eurozone. So in this case, the market is pricing in a 25 basis point hike from 3.5% to 3.75%. And later on in the day, we look at the ECB press conference at 3:45 p.m. Then in Canada, we'll be looking at BOJ Governor Macklem issuing a speech at 7:50 p.m. on Thursday. Before we look at the CPI estimate for Switzerland. This will be on Friday at 9:30 a.m. before we look at Canadian jobs data, European retail sales, and the most important news on Friday will be the non-farm payrolls data at 3:30 p.m. So now that you have a brief highlight, we expect a lot of volatility to be happening in US dollar pairs as well as euro pairs. And on top of that, we might be seeing some volatility coming from Switzerland, Canada from their jobs data, and also there is this employment change in New Zealand tomorrow very early in the morning at 1:45 a.m. So now that we know what to expect, we look at a brief highlight of the charts, try to understand what's happening. So this was the big spike in the morning after the 25 basis point hike. So now as we look at the speech later in the day, we'll be seeing whether there is signs of continuation or reversal depending on the tone of the governor. Then there's the dollar index. So for the last 2 weeks, I haven't been in the markets. And as you can see, the US dollar index has been trading sideways with a slight break towards the upper side on the 4-hour, followed by a retest and a continuation, indicating a very strong dollar this week. So if you look at the range of last week or the last 2 weeks, this is the highest price and this is the lowest price. So if we price in the tail here or the end of the tall candle here, then you can see that the market is now breaking towards the upper side, indicating a very strong dollar. So we could be seeing the dollar being very strong ahead of the FOMC press conference tomorrow. And this is a tradable or actionable intel. So once you do a technical analysis, it might make sense to price in a stronger dollar for the day. So now that we know that, if you look at Euro USD and how it's performing, it's currently testing a key level or a very strong support level here. So just below 1.09709, which is a support level that we had marked previously. So you can see the number of rejections that have happened around this area, and the current candlestick is indicating a break towards the lower side. So at the end of the day, at the end of the hour, when the candlestick closes, if we have a clear break closing, let's say around the lower edge of this yellow rectangle, then we might be seeing some lower prices happening in the Euro USD ahead of the FOMC as well as the ECB press conference. So USD CAD, very interesting. After having this sharp drop, a pullback and a continuation for the downwards, you can see the major reversal that happened before dropping here on Friday. And now we are seeing the market attempting to recover as the dollar remains very strong for the day. So in this case, I would be looking for signs of a break towards the upper side, since this level seems to have been holding quite well. And if you stretch backwards, you can notice that the level had been tested before. So if the market finds this as the support, then a continued dollar strength would mean the USD CAD bouncing higher. So a very short-term target would just be this low here, and 1.35867 might be a nice target for a very short-term trader. But then if the rally continues, then we might be looking into these highs here. So as for USD JPY, I think this one is trading at a very important point. So this is a high that we saw last month, and now, this was March. So April, we basically spent the entire month on the lower side. So let me remove all these charts. So just a moment. So I can see there's quite a number of questions coming in. You are reading from which site? I don't know what the question was referring to, but I think I've done this on the Forex Factory for the economic calendar. And of course, the MT5 for the price technical analysis. Explain why pound yen has been bullish, unlike JPY with other crosses. We'll be checking on that. I see several central banks are expected to raise rates, but focus is only on FOMC. I understand USA is the biggest economy, and USD, we also be looking at that. So let's continue. So this is a key level resistance on USD JPY, and it's a resistance that we saw in March. So the majority of April we spent in this trough here. And if you look closely, you'll notice that this particular shape looks like a very common chart pattern that we normally describe as a cup and a handle. So whenever you see this, then this is usually an expectation. The market pulls back down before continuing higher. So most of the cases, you'll notice that once the market gets to a major resistance level, then we could be seeing the market pulling further back downwards. So in this case, the key level test is at a price level of 137.889. So the market has come a long way in order to test this level. So it's still too early to say that the market will pull back. So I'm expecting the price to actually test the actual price level, 137.889. And then from here, I'll be looking for signs of reversal or signs of rejection of higher prices so that you can trade the cap. And this basically means the price pulling back down. And this would present some short selling opportunities. So as for gold, the key price level has been 2,000. So I remember marking this. So there's a number of times that the price has rejected the 2,000 price level. Every time it gets here, pulls back down. But then the developing pattern is what looks like a triangle with the declining trend line here, indicating lower highs, and inclining trend line here, indicating higher lows, which basically concludes to sideways momentum. So since the 14th of April, the market has been moving sideways, trading between these two trend lines. So right now, as we speak, we are looking at gold testing the lower trend line. So a rejection of this lower trend line would mean that now we look for positions that potentially target the upper band or even just the 2,000 price level. However, with what we are observing with the dollar being pretty strong, then the potential for a break is still there. So we could be seeing a price breaking here and trading down to the base of the pattern. The base of the pattern is where the trend line begins here in this particular chart. So a price level of around 1968.60. So a break would just be short term, targeting this area, but a strong bounce would get us right back to the upper side of the pattern. So as for the US equity indices, they have been quite strong, especially in the last 1 week. So we saw a very strong recovery here, but then following the collapse of the First Republic Bank and the strength of the dollar, we tend to see the inverse relationship happening. So in this case, there is that potential that we'll be seeing the S&P 500 trade back downwards. So trading back downwards would mean that we target a previous level. So 41.39 seems like a nice target, especially if this momentum continues. So it's a similar case for US 30 or the Dow Jones. So a drop back to an area of 33,696 might be a nice target. And also for the US Tech 100, we could be seeing the price pulling back downwards. And this is based on the inverse relationship of the dollar and US equities. So we could be seeing the price pulling back today as we anticipate the Fed meeting tomorrow. So as for UK oil or Brent oil, as you can see, it has been trading sideways, but even if it's trading sideways, you can see a common theme emerging. So yes, the highs are slightly lower, but then if you look at the prevailing pattern on this other edge, we have what was looking here like some form of support. So I'm judging from these lows here, before the market broke to the lower side, went right back up, got to the upper trend line, and then broke down lower towards the lower side. So this is indicative of a bearish momentum. And at the same time, it's very important to note that this big gap that opened here, and this is some time back when the OPEC and Saudi Arabia announced that they are doing oil output cuts. This eventually led to a big jump. Oil traded sideways for the week, then traded higher before pulling back downwards. And last week, we managed to close the gap. So closing the gap might be the end of the bearish momentum. So potentially, we could be seeing the oil markets start to recover. However, there's a prevailing pattern happening on H1. So if you draw your trend lines on the 1 hour chart, you'll notice that there is a very strong trend line here. And now the market seems to be testing this trend line continuously. So in this case, a break above the trend line would mean that we go for bullish positions, but then a rejection such as what we are seeing here is indicative of some further bearish momentum. So that's it for today. There was a request on pound yen. So let me check on that before we end the session. So as we have seen with the dollar index making some strong recovery, USD making a very strong rally against the yen, then if we do a comparison here and we look at pound yen, just a moment. So this is what we are seeing as the common theme here. The JPY being extremely weak against other currencies. So it's weak against the US dollar. It's also weak against the pound, as the two central banks, that's the Bank of England and the Fed, keep on hiking interest rates, whereas the Bank of Japan is not doing anything to hike interest rates. Then this explains the strong rally that we experienced last week. So from here, you can see that we are testing a major resistance level. So from the 4 hour chart, you can see a strong rejection happening. And from the price action of the last couple of candlesticks on the 1 hour chart, it's very clear that the pound is no longer breaking this particular level. So you might be seeing some profit taking here from the guys who enjoyed the strong rally last week. So expectations are in order that we could be seeing the pound yen pulling back downwards. However, the theme remains the same. The fundamentals indicate that we could be seeing higher prices for the pound yen, especially if the 172.185 price level happens to be broken. So for now, some form of profit taking, pullback, market takes a breather, but the idea is to look for continuation even higher. So that's it for today. What drives the CHF strength? SNB has among the lowest interest rates, yet it's strong across pairs. So we know that the Swiss franc is partially backed by gold. It's one of the only currencies that are partially backed by gold. So they have a very strong currency that a lot of institutions trust, especially in Europe. So a lot of companies tend to send their headquarters in Switzerland while they're operating in Europe because they feel the currency is much safer and the financial system is very strong. So the demand for the Swiss franc tends to be significantly higher than the currencies surrounding it. And that explains why the SNB had kept interest rates at a negative before they started hiking earlier this year. So with this in mind, we know that as long as there's crisis happening around Europe, companies will tend to send more money to Switzerland. And with this demand, then the Swiss franc tends to remain strong. So another one from Kosgei, does Yellen warning the US Treasury of running out of cash as soon as June a concern? So yes, Treasury Secretary Janet Yellen basically raised a concern that by the 1st of June, if the US doesn't raise the debt limit, then the government will run out of money. So this is a very common thing that keeps on happening, but every time you can rest guaranteed, the US will always push the debt ceiling higher. So this is not a real concern. Yes, it's a political thing, and they're trying to push the guys on the other party to vote for a debt ceiling raise. So it keeps on happening. Even after they raise this time, they'll still borrow more and they'll get to the ceiling again, and then they are going to raise the ceiling yet again. So I don't think these are real concern. I think the concern you should be worried about is the banking crisis, and also that some developments happening in the commercial real estate sector in the US, where more and more people are defaulting on their mortgages, and this is leading to yet another crisis. So that's it for the day. Remember, today is Tuesday, so we get to experience a double. So from 4 p.m., we'll be having another session. So make sure to tune in. Just go to YouTube, check on FX Pesa. We'll be having another live session. That one will be more detailed. It's not like the market snapshot. So we'll be able to dig deeper into some of these topics and understand the key market developments by then. So thanks everyone. Thank you for your time, and I hope to see you on the next session.